Hey guys, welcome back to the channel. For those of you who've been following my journey for a while, you know I recently made a Career 2.0 transition to becoming a professional airline pilot. And now that my flight training is complete and I've received a job offer from the airlines, it's time for me to start implementing another part of my strategy, and that is to become a successful real estate investor. Being a little later in life, the wages that I have the opportunity to earn from the airlines are not going to be enough to provide me with the level of retirement income that I want to have. And when I say I mean my wife and I. So therefore, I need another way to make money. And so now I'm really focused on developing a scalable real estate strategy that is within both the reach of the capital that I have, as well as the experience or lack thereof that I have. And that's what we're going to talk about in today's video. In particular, what I'm going to cover today is how I initially thought I would be able to execute a strategy acquiring properties in Boise where I live. And unfortunately, for reasons that I'll explain in this video, that's not going to work very well. So I came to the conclusion rather that I needed to spread my wings, so to speak, and find another market to invest in. So in today's video, I'm going to be sharing with you what I'm doing to get unstuck, as it were, and move forward with my initial goal of buying 3 houses in as short a period of time as possible. So if that sounds good to you, buckle up, because here we go. So before I dive into all the nuts and bolts of why Boise didn't work and what other market I've chosen and how I've chosen and so forth, which is going to be the bulk of today's video, I do want to speak to the fact of why did I choose real estate, given that I'm an entrepreneur, I've built and sold companies, I've got Inc. 5000 plaques on the wall behind me, like why real estate versus starting or buying another business? And the short answer is, and I've covered this in more detail in earlier videos, the short answer is just I don't want all the hassle, the stress of a lot of employees and moving parts in a very active business. I want something that is much more passive. Not that real estate is entirely passive, but so that I can do it in and around my daytime airline pilot job, kind of turning the volume up when I want to work harder or turning the volume down when I want to work less hard. So that is probably the biggest reason why I'm choosing real estate, but also some things that are super important is I need a way to build equity. Now, businesses are a great way to build equity, but so is real estate, as many people have proven. And as I covered in another video, getting financing for real estate is a lot easier than getting financing for a startup business. Existing businesses, a little different kettle of fish. You can get SBA loans and so forth. But suffice to say, there is a lot of different ways that you can go ahead and finance your real estate. And then also, I want a way to build something, an asset that's going to generate relatively passive income for a long period of time, because I'm not really worried about covering our lifestyle expenses for the next 15 or probably even 20 years, because I expect that I'm going to continue to fly during that time, either for an airline or after age 65, which for me is about 11 years away. I'll probably be a contract corporate jet pilot of some sort. But what I'm really thinking about is, hey, when I don't want to work anymore, or maybe I can't work anymore, where's that income going to come from? And I see real estate as a really phenomenal vehicle for that. Plus, real estate offers some really incredible growth opportunities as my capital and experience expand. Like many people, I've chosen to start off in single family houses, mostly because it's really low risk, and I'm quite a risk averse person, even though I've been an entrepreneur for 30 years. And so I really, I like to follow Warren Buffett's rule number 1, and that's don't lose the money. And when you get into more complex real estate transactions, things get a lot more complicated, and so the opportunity to lose money is absolutely there, and I don't think I'm ready for that yet. So hopefully you can relate to that, and that'll make this journey even more enjoyable for you. So coming up in the next section, we're going to talk in detail about why Boise didn't pan out and where I'm going and why. So let's jump into that. All right, so Boise didn't pan out and I'm going somewhere else. So, like, why? So, before we get into the nitty gritty of that, let's talk about conceptually growth markets versus cash flowing markets. So, Boise over the last few years has been a huge growth market. Our prices have gone up incredibly. As you can see on the chart on the screen, and I'm kind of giving away where I'm going, Cincinnati, you can see a chart there of house price appreciation in Boise, Idaho. Um, Actually, it's just Idaho in general, but Boise's a huge part of Idaho, versus that of Cincinnati. And as you can see, there has been a substantial gap that has gotten bigger and bigger and bigger. So growth markets are typically where house prices are higher, where the opportunity for growth of the price of the house is higher. Cash flowing markets, on the other hand, as the name suggests, a little easier to make the numbers pan out so that you can actually afford to make all those mortgage payments that you're going to have to make in order to keep those properties. But price appreciation isn't quite as much. So on one extreme, you might have a market like Detroit, which has been a cash flowing market for years. Prices there have not grown nearly as much as they have, say, in Boise. And then Cincinnati is kind of like somewhere in the middle of those two markets. So that's one of the major reasons why I've decided to go to the Midwest is I got really frustrated. I looked for this journey now has been about a month for me. I know I haven't produced a whole lot of videos, but it's been about a month since I produced my Pilots Making Millions in Real Estate. And I've looked at a lot of properties in Boise, and it's always the same scenario. A typical older 3-bedroom, 2-bath house in Boise's somewhere in the order of $400,000, give or take maybe 20 or 30 grand, depending upon its condition, its location, the neighborhood, etc. And rents are somewhere in the order of $2,000 a month. And you don't have to be a rocket scientist with your calculator to figure out that you're going to have negative cash flow on that property, which means that, how do you carry the property? How do you make your mortgage payments without coming out of pocket every month? And that's obviously not ideal. Whereas over there in Cincinnati, which I'll explain why I chose Cincinnati here in a little bit, the same kind of typical house costs only about 250-ish, $250,000 to $270,000, and rents for just a tiny little bit more, on average around $2,100, which means that almost every property that I've looked at so far produces some level of positive cash flow. Now, I want to put the big asterisk there, because when I say some level of positive cash flow, that assumes if you really want to take cash flow into account, you've got to factor in maintenance, you got to factor in a management fee, you got to factor in a vacancy allowance. Well, I'm planning on managing these properties myself. I'll explain how later in the video. So I'm just looking at the difference between gross rents and mortgage payment plus insurance plus taxes. And some people might say, oh, Trent, you're not factoring in maintenance. And absolutely, I'm not on the surface of it. But when you see a little later on how the levels of cash flow, basically I'm looking for houses that'll produce somewhere between $400 and $500 a month in positive cash flow, which I'm just going to leave in a bank account because that's going to be my maintenance reserve essentially. So why did I choose Cincinnati? Because before this little epiphany happened for me, I was really stuck on which market to choose from. And there are websites like biggerpockets.com that have all sorts of reports on the most affordable markets and so forth. But in every single market, there's good neighborhoods and there's bad neighborhoods, and all of that to me felt, without traveling there first, it all felt very, very overwhelming. So as luck would have it, one of my good pilot buddies, a fellow by the name of Mike, lives in Cincinnati, has been investing in Cincinnati for years. He has about 10 doors in his portfolio in addition to being a corporate jet pilot. And he's also a licensed realtor. So that made it really, really easy. I trust Mike. He's a good buddy of mine. It made it really easy for me to have a good look at Cincinnati. And then he painted a very compelling picture which I then researched with ChatGPT on the economic outlook for Cincinnati in terms of economic growth and development, who the major employers are, what the job growth opportunity looks like, what the lifestyle is. And all of that boiled down to that Cincinnati actually looked like a pretty darn good place to buy real estate over the next 10 years or probably more. And so between that and my comfort of having someone who I trust kind of on the street to walk these properties for me, made Cincinnati kind of like my replacement market for Boise. And so while Boise is likely to grow at a faster rate from a price appreciation perspective, which is where all the real money is made, by the way, but if you can't afford to make your mortgage payments in the meantime because of that negative cash flow, then you can't buy the properties, then you don't get the price appreciation. So yeah, Boise's probably going to grow faster, but Cincinnati is still looking like it's going to grow reasonably well, and I will be able to afford my mortgage payments in the meantime. All right, in the next section, I'm going to talk about my plan for acquiring my first 2 to 3 houses. So let's get to that. All right, so now let's talk about my short-term plans to acquire 2 to 3 houses and why having a plan like this, I think, is so important to kind of fit into the bigger plan, especially if you're a new investor like me, because it is very, very easy to get overwhelmed and then you don't end up taking action and you don't get anything done and so forth. So I'm kind of, breaking this down into like a first mini milestone, and maybe to some of you that might sound like a huge milestone, like holy hell, how do you buy 2 to 3 houses? But as you'll see, as I explained in that section, or in this section rather, that to me is a pretty easy goal for us to accomplish here in the next maybe 3 or 4 months. My jet training might get in the way of that. I might have to take a little bit of time off, but we'll see how that pans out. So the very first thing, once I'd realized that, okay, I'm willing to invest in the Midwest in Cincinnati, Ohio, I asked Mike to get on the Zoomy Zooms with me, and we just talked about all the different neighborhoods because he's lived there a long time. He knows the area very, very well. And he basically gave me this virtual tour by way of Google Maps of these are the good areas and these are the not so good areas. So these are the areas where you want to invest. So that was the first thing. And so that, again, made me feel comfortable. Like, okay, Mike really, really knows this market, because he was going into all sorts of nitty gritty reasons that only a local would know about why this particular neighborhood here is so much better than this one that's only just a couple of miles away here. And that type of knowledge is incredibly valuable. And by the way, if you don't know a Mike, if you want to find an investor-friendly realtor, my guidance to you on that is this: make sure that you're only dealing with a realtor who has their own investment portfolio, and you're going to find that realtor through maybe on Bigger Pockets in the forums, or simply word of mouth. You're just going to have to grind your way. If you're not lucky like me, who happen to know somebody, you're just going to have to keep reaching out through your network, through the first degree, second degree, third degree, until you find an investor-friendly realtor who's active and invests, has their own portfolio. So why is this plan to buy 2 or 3 houses, quote unquote, going to be relatively easy for me? Well, I'm going to do it in the most simple, basic way imaginable, and that is that I'm going to use my own cash for the down payments, and I'm going to get more typical, just regular bank financing for the mortgages. So that is not difficult to do. I don't have to talk anybody into giving me their money. I don't have to look for seller financing or off-market deals or so forth. And then once I've got those 3 properties in my portfolio, yeah, I'm going to try and do some other things in terms of the way I finance the properties and how I find the properties and buying off market versus on market or what have you. But I will have the credibility when I'm talking to any potential investor or partner or whoever. Yeah, I own 3 rentals and I've owned them for this long, and this is how I bought them, and this is what I did, and this is how I've been managing them since then, and everything's going really, really well. And so now I just kind of want to scale this up, and I want to do this a little bit more. The other thing, one of the first things I'll probably do at maybe 5 or 6 months after I've acquired those houses, and you'll hear me talk about this in future videos, is I really would like to establish relationships with private lenders. For example, if a accredited investor has money in their self-directed, I believe it's an IRA, they can actually lend that money to you like a bank would lend money to you for mortgages. They get the security of your property as their collateral. And I would much rather borrow money from a private individual than I would from a bank, simply because of the flexibility and the relationship. And maybe I'm getting the money at a little lower rate because, let's face it, someone's going to be pretty happy if they're a conservative investor in their IRA and they're making 4% and maybe mortgage rates are 7%. Maybe I say, well, how would I pay you 5.5%? And they're like, hey, that's great for them and it's good for me as well. Or the other part of my plan in getting these first 2 to 3 houses is going to be that Mike is going to play a heavy role in assisting me. Obviously, I've described to you a bit of how that's going to be so far, but like today, for example, the day I'm recording this video, he's out there going to visit 3 or 4 different properties with his iPhone in his hand, and he's making walkthrough videos for me of all of these properties. And then we hop on the phone and we talk about what he's captured in those walkthrough videos. And that, I find that incredibly valuable, because it makes it a lot easier for me to kind of get an idea of the condition of the house, get his thoughts on the house, and so forth. So I want to close out this section by talking about, why am I buying on market versus off market? Because if you've been paying attention to any real estate guys on YouTube or podcasts or what have you, there's a lot of different ways to acquire properties, many of which are the off-market method, meaning it's not listed and for sale on the MLS. I'll probably cover that in more detail in a future video, but the short answer is the KISS principle. When a property's on the MLS, they want to sell it, and I don't need to talk them into selling it. Now, yeah, there will be competition from other buyers, but I also don't have to spend $2,000, $3,000, $4,000, $5,000 a month like I did about a decade ago, doing direct mail campaigns to landlords, to sellers of properties that they don't live in, trying to find, like the 1 in 100 that might want to sell their house and sell it to me off market. That's a whole nother topic for a whole nother video, but basically it boils down to, I just really want to keep this simple for these first 2 or 3 houses so that I can get traction, get some experience, gain some knowledge, and build some credibility before moving to the next phase of my real estate journey. All right, in the next section, we're going to talk about some challenges that I think are going to come my way and how I'm going to deal with those. So let's dive into that. All right, so in this section, we're going to talk about challenges and risks and how I'm planning on dealing with that stuff. So obviously, when you're buying properties out of state, it's not super convenient to just drive over and, have feet on the lawn or feet in the front door or what have you. Things get a little bit trickier in terms of acquiring the property and managing the property on an ongoing basis. And again, that's something that I hope to get a lot better at, doing the things that I'm about to explain to you. So let's first of all talk about tenant selection and property management. So we do have some experience in tenant selection. We've owned rental properties before. We owned a 15,000 square foot light industrial building that had 6 or 7 tenants in it. And so with residential tenant selection, one of the biggest things that you look at is the credit rating. And then the second biggest thing is how messy is their car, because if their car is a pigsty, chances are they're not going to have a very clean house. So Mike will be doing open houses for me where we'll have, hey, we're going to have an open house on Thursday at 7 and a bunch of people will show up and everyone will walk through the house and they'll submit their applications and so forth. I'll be paying Mike to do that on my behalf. And then once we go through and actually select a tenant and move them in, how are we going to deal with property management on an ongoing basis? So Mike has a network of contractors that he's built for himself because he has 10 doors in his own portfolio, and you can bet your bottom dollar I'm going to be leveraging those relationships. And then I'll be also adding in my own systems and software, which I'll talk more about in a future video when I get it all figured out. But I'm a very systematized and organized person, so I'll be leveraging technology in every way that I can to assist me in making that property management as easy as possible. And then how are we managing risks? Well, first of all, earlier in this video, I talked about how we did that Google Maps neighborhood tour Well, I'm not going into any battleground neighborhoods. I'm not buying properties in C or D neighborhoods where maybe they cash flow like crazy, but they also have a huge PETA or pain in the ass factor. We're restricting our acquisitions to relatively good neighborhoods. They don't have to be an A neighborhood, but it's probably going to be a C plus or a B minus neighborhood on the lower end, and maybe up as much as high as a B plus on the higher end. The other thing I'll be doing is keeping, I'm a huge believer in keeping cash reserves on hand to cover whatever comes up and to cover vacancies and so forth. So I'm never going to be running it so lean that, you know, if I had a vacancy for 2 months that we'd be in real trouble because we couldn't make our mortgage payments. So by keeping cash on hand, that helps to lower that stress a whole bunch. And then finally, just the KISS principle, keep it simple, stupid. As I mentioned, this is just my first 2 or 3 houses. I'm not trying to do anything here that one would call real rocket science. So we'll close up the video here with my final thoughts here in just a second. All right, guys, for those of you who have stuck with me to the end, we're now going to talk about my final thoughts and as well as my action plan. And hopefully my action plan might be your action plan as well, because my goal with producing these videos is to not just give you guys something to watch, but also to give you all something, much like I did with my journey to becoming a professional pilot, giving you a proven path that you can follow, ideally to shortcut and save some time that you might otherwise waste making mistakes all on your own. Maybe instead I can make the mistakes for you. You don't have to go make them on your own. All right, so number one, anytime you're embarking on, you know, building a real estate portfolio or doing really much of anything for that matter, research is incredibly important. Do your homework. And over the last month, I've been doing a lot of that homework. But what does that homework actually look like? Because if it's just homework without any action, well, then you kind of get this thing called analysis paralysis, and that's not going to do you any good at all. So my homework has been a combination of watching other people's YouTube videos, of looking at properties, looking at a lot of properties. I don't drive and see them all, obviously, but I've figured out a way, and I figured out some software tools, which I'll share in future videos, to very quickly do a brief analysis of, hey, does this deal warrant any further investigation? And then for the deals that do warrant in further investigation, of course, Mike goes and he does drive by and he does walkthrough videos. And then unless there's a reason not to, we're going to make an offer on that house, because reading books is great and watching videos like this one is great. But if you don't ever take any action and you don't ever make any offers, you're never going to buy any real estate. And as you may or may not know, my goal here is to buy 20 doors in the next 36 months. And I hope to actually shoot that goal right out of the water. But nonetheless, I didn't want to make it sound too crazy. And so action is an important part of the strategy. So that's, I guess, a quick overview of my near-term action plan, which undoubtedly will evolve. So my question for you is this: if you're still watching and you have owned rental properties either in your own market or in an out-of-state market, and you have some advice or experience to share with me, man, oh man, I would love it. And the other people who are watching this video, I would love it if you would leave that in the comments below. And if you enjoyed this video, please do help me to get the YouTube algorithm to show it to other people by clicking the like button, leaving a comment of some kind, even if it's just a high five or an attaboy. And if you would consider subscribing to the channel here on YouTube and clicking that little bell so you get notifications of new videos. And or even better, you should go to flywithtrent.com. There is now on the navigation bar, there's a page called Real Estate Investing. And if you're not really interested in being a pilot, but you want to learn more about real estate investing and you'd like to get email notifications of future videos that I do, you can go ahead and enter your email address there. I will not be spamming you to death. I send an email when I produce a new video is pretty much my rule of thumb. So thank you very much for watching. It's been my pleasure to produce this video for you. I look forward to your feedback, questions, and comments. Take care, everybody. Bye-bye.